Okay, Assalamualaikum warahmatullahi wabarakatuh to all. So for today, the topic that we are going to be covered are Islamic Exchange Traded Fund, or also known as IETF. So without further ado, the topic outline for this topic is first is Exchange Traded Fund. So what is ETF? Second, the features of ETF. And third, the nature of ETF with respect to stocks and unit trust. And the last one is Islamic Exchange Traded Funds, which is the main focus of today's topic. So ETF, it is a listed index tracking fund, which is you can browse it or you can search for it in the Bursa website, structured as a unit trust scheme where its primary objective is to achieve the same return as a particular market index. So each market has different index. So we, as a person or as an investor, we need to have a knowledge, or sometimes we can appoint our unit trust agent or our broker to search for the index that is potentially can give us a good return. So, and the next one is by investing all full application or substantially all strategic sampling of its assets. And the last one is in the constituent securities of index. So it is underlying assets. A constituent of securities, which is it derived from securities from the underlying of the index. Okay, so what are the features of ETF? So the first one is an ETF is listed. Its units can be bought and sold anytime during the stocks exchange trading hour. So during the stocks exchange trading hour, you can buy or you can sell your ETF unit. So the next one is an ETF is an index tracking fund. So it is easier for you to track the performance of your market index, whether you want to continue to be investing in that particular market or not, by referencing back to the index. Okay, the next one is investor buy and sell ETF unit through stockbroker rather than unit trust agent, because for unit trust specifically, you will need usually, which is the common practice, you will need to go through the unit trust agent in order to execute the whether selling or buying of the unit trust for a share. Okay, the next one is most ETFs are passively managed index funds, so it is more easier for you to what we call to monitor the performance. And the manager do not pick stocks based on fundamental analysis. Instead, the managers track the performance of a benchmark index. So it is more easier for the manager to manage the fund because they only need to refer to the index performance, whether to proceed with that market or not. So Malaysia first Sharia compliant ETF, which is my ETF, Dow Jones Islamic Market Malaysia Titans 25, or also known as my ETF DJIM 25, trades on Bursa Malaysia, which is the main exchange traded platform in Malaysia, and tracks the Dow Jones Islamic Market Malaysia Titans 25 index. And this indicates that the my ETF DJIM 25 holds shares of the 25 leading Sharia compliant listed company in the country, which is Bursa Malaysia. So what is the fund objective? It's very simple. So the fund objective is to look to closely correspond to the performance of the benchmark index, regardless of its performance. As I mentioned earlier, the most important thing is to refer to the index performance. And then the fund manager attempts to achieve an absolute value of tracking error of less than 3% between the net asset value, or NAV, of the fund and the benchmark index. And then ordinary brokerage commission may apply because there are some fees that you need to pay. However, there are differences between ETF and unit trust, which we'll be discussing. We will discuss. Okay, so the benchmark index. The benchmark index, namely the Dow Jones Islamic Market Malaysia Titans 25 index, is a market capitalization weighted and free floated adjusted index provided by Dow Jones through the license agreement. So the benchmark index was created on 18 January 2008 by Dow Jones and was constructed based on a reference value of 1,000 as of 17 January 2008. So the benchmark index consists of 25 Sharia compliant securities of company companies listed on Bursa Malaysia Securities Berhad weighted by market capitalization. Of course, the main focus for the exchange traded platform, besides gaining a profit, market capitalization is also one of the main components of its functions. So the universe for selection of the components of the Dow Jones Islamic Market Malaysia Titans 25 Index includes all equities in the Dow Jones Islamic Market Malaysia Index, which is an index comprised of Malaysia-based companies, Malaysia-based companies that comply with the methodology established by Dow Jones for screening stocks to comply with the Sharia principles, so that they make sure that all the securities or all the companies that are listed in their index are Sharia compliant. Okay, the next one. So this is the example of my ETF, where you can see that the valuation point as at close of 8 May 2020. This is an example for year 2020, where you can see the manager's fee, trustee fee, license fee, and the NAV, net asset value. And then the Dow Jones Islamic Market Malaysia Titan 25 Index, which is its value. You can also see for each of the issuer, which company issued that stock. For example, IHH Healthcare, Petronas Chemical Group, DG.com Berhad, Samdabi Plantation, and others a lot more. Okay, so this is one of the example of the information that you can gain. For example, you can see which class, whether it is Sharia compliant equity or not, and it is based on benchmarking of what index. So we can see that it is from Dow Jones Islamic Market Malaysia Titan 25 Index, and the launching date is 21st January of 2008. The currency used is Ringgit Malaysia. Manager is IV Cap Management Sdn Bhd. So the manager of the fund is IV Cap Management Sdn Bhd, and the income distribution is semi-annually distribution, and whether the creation or redemption per unit block is 400,000 unit or whole multiple thereof. However, it is subject to the discretion of the manager, which is the IV Cap Management Sdn Bhd. You can also, the short name of the stock, you can see it from the information, the securities code, and also the Bloomberg ticket fund, and also the benchmark index. Even the fees information is included and provided in the fact sheet here, which is the management fee is 0.4%, the trustee fee is 0.05%, and the license fee, total annual fee is 0.49%. So as an investor, it is more easier for you compared to unit trust, because you can gain or you can get all the information from the website. So it is much transparent, and it is much more easier for us as an investor. So how an ETF unit is created? So Kuala Lumpur Composite Index. From the Composite Index, for example, mainly comprises of companies such as Genting, Plus, Maybank, and Telecom. So they have a portfolio they are building into a fund where the safeguard is the trustee lah. Underlying security sourced from the open market, which is can also come from the institutional stock holding. So from the fund, they will create the ETF unit. So the ETF unit will be listed on the Bursa Malaysia, which is for us or for an investor to buy or sell a unit that they are interested in. So understanding the exchange traded fund, ETFs. So from the investor through a broker, as I mentioned earlier, for ETF, you need to go through broker compared to the unit trust, where you can go through the unit trust agent. And then through the ETF, the market maker is similar to the liquidity provider, which is the company that issue their unit into, or make sure that their ETF unit is listed in the Bursa. So the stock market, which is the Bursa Bursa Malaysia. So they gain cash, investor give cash to the market makers, and the market maker will give cash to the stock market, and it is a revolving cycle, which is a similar of kind of process, which is basket of securities and then creation of units by the market makers. Okay. There are two forms of change for unit in circulation. So the first one is creation, exchange of perfect basket for ETF unit, and then for the cash creation is exchange of cash for ETF unit. So for redemption, they exchange the ETF unit for a perfect basket as well. However, they exchange the ETF unit for cash instead of creation, because in creation, you are going to exchange your cash for an ETF unit. However, for redemption, you are going to exchange your ETF unit for cash in case you do not want to hold that ETF unit anymore because it does not give benefit to you, for example. So creation of ETF, for example, the IV cap manager, the primary market investor from a basket of securities goes to the participating dealer, which is act as an intermediary, and then into a basket of securities. So that they appoint their manager, which is the IV cap management scenario, for example, and then it will provide the ETF unit back to the participating dealer, and the ETF will be offered to the investors. Investor can be comprised of anyone else. You can be investor. Even I myself can be an investor as well. So this is the example of creation. So the next one is the example of redemption, because you want to sell back your ETF unit for cash. So you're going to sell back your basket of ETF unit to the participating dealer, which is act the intermediary between you and the manager or the trustee of the fund. So the trustee will sell basket of security back to the participating dealer and basket of security to the investor in order for them to create back the ETF unit back into the market. However, you will get the cash because you exchange the ETF unit for the ETF unit for cash. So this is the operation of Islamic ETF. So the basic structure is almost similar to the conventional ETF. However, one of the most key differences between the conventional ETF and Islamic ETF is that we have the Sharia advisor or Sharia committee, because Sharia committee will help and guide, or in other words, will make sure that all the ETF units are Sharia compliant. Because as a Muslim, we know that we must make sure that any of our transaction activities or business activities, in other words, in our daily muamalat activities, it must be halal, or in other words, Sharia compliant. So the ETF have dual existence in marketplace, where first they involve in secondary and primary market. In primary market, institutional investor create and redeem the unit, and in secondary market, retail investor buy and sell them. So as I mentioned earlier, which is the participating dealer. Okay, the participating dealer act as a intermediary between the investor and the ETF for creation and redemption as well, because they cannot only be creation, because sometimes not all people are going to hold their ETF unit for long, because sometimes maybe they want to hold for 1 year maximum or 1 year minimum, and then they want to sell back the ETF unit because they have their own purpose. And then also function as or work with the appointed liquidity provider to supply new unit to investor, or buy up excess supply from investor on the stock exchange. And the second one is the participating dealer need to deliver particular basket of stock to the ETF manager to get the ETF unit. Of course, once the participating dealer has the ETF unit, he could in turn trade the unit in the secondary market. So what is the role of ETF manager? It's very simple and it's very direct. The primary job of responsibility of an ETF portfolio manager is first handling the portfolio investment. And the portfolio manager is ultimately responsible for making the decision on investment to include in the fund portfolio. An ETF manager also engage in ongoing research and equity or other asset evaluation to make sure that in keeping track of the market activity, trends, and as well monitoring the economic news and condition that may affect the portfolio profitability. For example, given in our current situation or where COVID-19 pandemic, so it is very important for the ETF manager to monitor the economic news, because when they diversify their portfolio, for example, in tourism, in hospitality, in our recent pandemic, COVID-19, it is not profitable for the portfolio of the fund. So the manager must make sure and monitor the economic news and keep track of their portfolio to make sure that at least to minimize or in the minimum way, which is to minimize the risk and get some return at least. Because we know that in Islam, no risk, no gain. No risk, no gain. With risk, there will be accompanied a benefit or profit. So the market maker or liquidity provider, which is market maker, create ETF unit by delivering the basket of underlying security, content of many underlying security to the ETF provider in exchange for a block of unit of ETF with the same market value. So this newly created ETF unit represent an inventory that can be sold on this stock exchange to investor, for example, Bursa. So this creation process can be reversed into redemption as well. As I mentioned earlier, there cannot only be a creation process, there also has to be a redemption process, whereby the market maker exchange back the ETF unit with the ETF provider for an equivalent basket of underlying securities from the ETF. So this sometimes occur if many investors, for example, you in an ETF choose to sell their investment at the same time. So the next one is trustee. Trustee is the custodian of the asset, which is the safeguard, which is, or we can say that the gatekeeper of the asset, of the asset of ETF. Moreover, they will ensure that ETF is administered in line with the trust deed and securities law, especially for Sharia compliant security ETF. Sharia compliant ETF. It is more rigid, it is more strict. Furthermore, it safeguards the interests of the ETF unit holder, which is the main purpose. What our purpose is. And one of the most important, which is the Sharia advisor, to ensure that the Sharia compliant of ETF, which is the main purpose of putting Sharia advisor in the process. So the nature of ETF with respect to stock and unit trust, ETF on the other hand resemble the feature of unit trust. Yes, they are similar in a way. Example, an investor purchases one unit of the unit trust. It is as good as holding the various stock on the exchange or bursa. Likewise, when an investor purchases one unit, it is as if the investor is holding several top stock, because it is a basket content of underlying securities, underlying asset from the top company. Okay. So in addition, unit trust involve active management, where the fund manager pick the stock that will generate a higher return than the market return. There are some differences as well, because our manager, the fund manager of the IETF will only refer to the benchmark index. So what are the comparison investment between ETFs, stocks, and unit trust? So first, from the nature. So it represents the basket of stocks, as I mentioned earlier. And for stock, of course, is a share. It is a specifically is a share. Then for unit trust, it is a unit that represent underlying basket of stocks. However, ETF represent a basket of stock. So it is a lot. Sometimes the basket may represent a lot of the unit from a lot of top companies, such as Top Glove in Malaysia. Okay, so traded on exchange, yes, it is. It can be traded on exchange, but for unit trust, it is not traded on exchange. And there is a differences between ETF, because that's why in ETF you got a lot more of we can say that diversified portfolio, because it is traded on Bursa, for example, because we know that in Bursa, the companies that are listed in Bursa is a reputable company compared to specifically just for unit trust. Okay, I believe we are clear on that. And the third one is the fund information. So the market price and trading activity data are readily available. As I mentioned earlier, you can just go to the website and browse for that particular benchmark index that you are interested in. You can monitor it. It is more transparent. And then same as stock, which is market price and trading activity readily available. However, for unit trust, the information available are only for the fund manager and the fund's appointed agents. So you need to go through the appointed agents. Maybe for some people, they have a, we can say that they are not 100% trust their appointed agents. Maybe they trust their agent range from 80 to 90%. However, there are 10% that they specifically they want to check it themselves, for example. However, for unit trust, the information is only available from fund manager and fund appointed agent. So there are differences between ETF and unit trust. However, there are similarities between them as well. So diversification, yes, because it contains a lot of portfolio from diversified of company. For stock, no, because it is specifically a stock issued from a specific company. Unit trust, yes. Can it be traded through broker? Yes, of course. For ETF, it must go through the broker. For stock as well. However, for unit trust, it is not. It is via unit trust agent. And from the management fees as well, we can see that the management fee for ETF is much cheaper compared to unit trust, which is for unit trust is 1 to 10% net for index fund. Furthermore, for ETF unit, we can check it. We can check the management fee, as I showed you earlier, from the website, that we can browse for each particular index that we are interested in. Okay, so the advantages of ETF is first, diversification. As I mentioned earlier, it presents a basket of units or basket of sorry, a basket of stock. So unit that present a basket of stock from top company. So similar to index fund, ETF provide investor with similar diversification benefit that derive from holding the benchmark index constituent stock without having to invest in each of the stock directly. So there are advantage of investing in ETF and shares, and also unit trust. The second advantage is lower expense ratio. So as a passively managed fund, ETF incur lower management fee and lower transaction costs as compared to an actively managed fund such as unit trust. So, and then of course, when the lower expense ratio, of course, the cost will also be lower. And then in terms of tradability, ETF unit can be bought and sold at any time during trading hours of the stock exchange. As long as you conduct the activity during the stock exchange, it can be bought and sold anytime. And the next one is transparency. It is very transparent. All the information can be browsed through the website to each particular market index. So the ETF prices are disseminated throughout the trading hours on the stock exchange, and then the constituent stock of the index which the ETF trades are normally published on the fund or index providers' websites. And the most important advantage of iETF is that it is Sharia compliant investment, which is the most important factors that will be considered for us, especially as a Muslim, in investing a particular investment. Okay, so we have talked about the advantages. What are disadvantages of ETF? So the first one is ETF are bound to the ups and downs of the market, because when the market is going through a fluctuation, when it's going up, it is good for us, but when it's going down, it is also going to be bad for us, for the investors specifically. So the performance of the ETF may be directly affected by the performance of its component stock security represented in the benchmark index. So it fluctuates a lot because it consists of many companies. Not companies are doing well, especially during pandemic times. And the second one is the risk of tracking error, which is this refers to the differences between the performance of the ETF as measured by its net asset value and the performance of the underlying index depending on the particular ETF strategy. It may not hold all the constituent securities of an underlying index in the same weightage of the index itself. Therefore, the performance of the securities underlying the ETF may outperform or underperform the index, and this will be reflected in its NAV. It is outperform, it is good for us, but if it is underperform, it is it's not good for us. So Sharia compliant exchange traded fund, which is an Islamic ETF, and conventional ETF share common characteristic. The main difference between conventional ETF is that first, the benchmark index that the Islamic ETF track is only the Islamic ETF lah, or the Islamic benchmark index. An Islamic ETF only tracks an Islamic benchmark index where the index constituents comprise of companies that are only Sharia compliant. That is the main key. And an Islamic ETF is also required to appoint a Sharia advisor or Sharia committee to make sure that, or in other words, is to provide expertise, guidance to ensure its structure, the modus operandi itself, the investment, and all the matters related to the fund activities are complied with Sharia principles. So these are the example of Islamic ETF that you can browse through the website, which is ABF My1, FBM KLCI EA, My ETF Dow Jones, CIMB A40, CIMB A50, My ETF ID. So there is a lot of ETF that can be browsed through internet, and it is transparent for us to search all the information regarding the index performance and etc. So that's all for this topic. So the summary of this topic is to make sure that you have learned about exchange traded fund, the feature of ETF, the nature of ETF with respect to stock and unit trust, and the last one is IETF, or Islamic Exchange Traded Fund, which is our main purpose for this topic. So that's all from me. Thank you for listening.